Hey, it's Eric Peterson with Copa Real Estate. Let's talk about what we're seeing in the market now, September 2019. Realtors can have a bad habit of always saying it's a great time to buy, it's a great time to sell. Well, that's true, but one thing that we're seeing right now is that I've never seen the market as good as it is right now in August and September. We're seeing still tons of people coming out, buyers to our open houses, still seeing multiple offers in some of our homes. Of course, that depends on what neighborhood you're in, what area and price range, so we definitely want to talk about your particular situation. However, what this does mean is that if you're thinking about making a move and you're trying to decide whether you do it now or maybe wait until the spring, there really isn't a reason why you have to wait until the spring to put your home on the market. You probably have a realistic expectation that you can still get a great price for your house even in September, October, November timeframe of this year. So give me a call and let's talk about that. Second thing that we want to talk about is what we're seeing with investors buying homes. And it used to be that if an investor was going to buy your house, you'd be looking at 60, 70% of the value of your home. That's no longer what we're seeing today. Right now we're seeing investors paying at market value or perhaps even above market value on some homes. Sometimes they understand the market and where things might be heading better than the typical first-time home buyers. And what that means to you as a seller is that if you're looking for a buyer of your house, but let's say that you need to stay in your home for a couple of months afterwards, that could still be a sale that's attractive to an investor. Because if you're thinking about an investor buying a house in, say, October or November of this year, it's very attractive for them to already have a tenant, you, in place in the house until, say, next spring, perhaps when your home would be built or ready to go. So if you're thinking about wanting to sell, but a little bit nervous about, hey, you want to be homeless, for your family, of course, we understand that you need a place to be, that let's talk and see what the investor concentration of buyers is in your particular area and whether that's a realistic goal to get an investor to buy your house at still a great price. Third thing we want to talk about is appraisals and what we see with that, how accurate they are. And so kind of funny story that we just had a house that appraised for $421,000 by one appraiser one week, and the next week it appraised for $470,000. So how can that possibly be? Well, there's really more art than science in terms of appraised value. And an appraisal, remember, it's just the opinion of value of one person at that particular time. Might be right, might be wrong. In this case, and I don't like to knock appraisers all the time, but in this case, the appraiser that valued the home at $421,000, he simply didn't understand the neighborhood and the market and where buyers were also looking. And so the comparable properties that he was using, it just weren't correct. And even though we met him at the property, we did everything that we could, there wasn't anything that we could do about getting that low appraisal. And what that means also for you, if you're buying a house, people get really caught up in the appraised value and being worried about paying too much for the house. Just because an appraiser tells you that the house is worth $421,000 in this case, doesn't necessarily mean that that's correct. And so you've got to be really careful about when you're buying a house that you don't rely too much on that appraised value. And I know that may sound crazy, but it's true. You don't want to miss out. In that situation, the buyers that had the lender that hired that first appraiser, they missed out on a great house because that appraiser was simply not competent, in my opinion. The other thing we want to talk about is convenience of selling your home, and what's more convenient, putting your home on the market or working for another 3 months or having over $100,000 extra for a college fund in the future. And so we're seeing all kinds of new what are called iBuyer programs where a company will come and offer you a much lower sales price on your house, but certainly more convenient in terms of not having to put the house on the market. Now they're also known, though, of course, you have to caution you for coming back and wanting a large credit for repair items as well. So that's the whole other story. But what we want to look at, the ones that I've compared, there was a $25,000, perhaps even more, difference between what a seller would net with a traditional sale versus with one of these iBuyer programs. And so you have to kind of think about that. You know, we're all paying, or a lot of us are paying a little bit more for convenience. Maybe you get your groceries delivered. Maybe you're buying stuff off of online and having it shipped to you and paying for shipping instead of going to the store. Of course, that's convenience. And when you're paying a little bit of extra, it's okay. But when we're getting into paying $25,000 or more, that's a pretty big deal. So if you think about that, for the average person, $25,000 of equity that you're losing after taxes, how hard do you have to work? Let's say that you have to work 3 months in order to make $25,000 after taxes. I mean, you just think about that. It's 15 weeks that you have to go to work, deal with your boss, customers, clients, just a daily commute in order to make that happen. Don't you think it'd be better and more convenient to kind of have your home made ready and show your house for a weekend or for a week or two and defend that equity and keep it for yourself? The second thing that you want to look at is, I'm always looking at how much money that I'm able to save in 20 years out, right? And so if you look at $25,000 today, that's still a ton of money. But what you really want to look at that is, what would $25,000 be if you put it in the stock market and invested it somehow? And so if you invested $25,000 compounded at, say, an 8% rate of return, you're talking about over $100,000 in 20 years. So if you think about it, if you've got a little kid, that's a lot of college education or a lot of money you could put towards other things, maybe your own retirement in the future, that you're getting simply by having to show your home for maybe a week or two, right? So give me a call and we can always talk about that. If you're considering one of those iBuyer programs or you have any friends, let's talk about it before you commit to that. Okay? Hey, thanks so much for watching. If you got questions about anything that we talk about, give me a call here at 512-791-7473. Thanks for watching and make it a great day.